You ever look at one of those huge, successful companies and just wonder, what's actually going on under the hood? Well, today we're going to pull back the curtain and learn the language of business itself, financial statements. We're going to figure out how to read the story a company is telling about its own health.
I mean, a company can look amazing on the outside, right? Popular products, slick ads, but how do you know if it's truly healthy on the inside? That's the big mystery we're tackling today. So think of yourself as a financial detective, all right? Because today you're getting the tools to crack this very case.
And this right here is our main tool for the job. A financial statement isn't just some boring pile of numbers. It's more like a standardized story. And believe me, these are the exact reports that investors use to decide where to put their money, that lenders look at to approve loans, and that CEOs use to steer their own companies. They're incredibly powerful.
Okay, so just like in any good detective story, right? You can't just rely on one single clue. You've got to look at all the evidence to really get the full picture.
And this is a perfect example of why. It's a classic trap. A company might have an income statement that shows it's making a ton of profit, but behind the scenes, they could be just weeks away from not even being able to make payroll. It happens way more often than you'd think, and it's why one clue can send you down a completely wrong path.
So if you really want to understand a company's financial story, its past, its present, and where it's heading, you need to look at all four of these key reports together. And here they are, our four crucial clues. We've got the income statement, the balance sheet, the cash flow statement, and the statement of changes in equity. Now, to get the clearest picture today, we're really going to focus on cracking the case of the big three. All right, first up, the income statement. This is the clue that answers probably the most common question about any business. Is it actually making any money? In our detective story, this statement reveals the motive, profit. You can think of the income statement, or the P&L as it's often called, like a video of a company's financial performance. It's recorded over a set period like a quarter or a full year. It tracks all the money coming in, all the money going out, all leading up to that famous bottom line, net income or profit. The basic idea here is actually pretty simple. Just picture a funnel. At the very top, you pour in all the revenue. That's all the money coming in from selling stuff. Then, as it goes down, the funnel subtracts all the expenses. The cost of materials, salaries, you name it. Whatever drips out the bottom, well, that's your final result, either a profit or a loss. All right, let's move on to our next clue, the balance sheet. So if the income statement gave us the motive, profit, then the balance sheet is like the scene of the crime. It's a detailed layout of the company's entire financial position at one single moment in time. And that word snapshot is absolutely perfect here. See, the balance sheet doesn't track performance over time. It tells you on this exact day, here's a list of everything the company owns versus everything it owes. It's a crystal clear picture of its net worth right then and there. The whole thing is built around this one fundamental accounting equation. Everything a company owns, its assets, has to equal everything it owes to other people, its liabilities, plus what belongs to the owners, the shareholders' equity. And here's the kicker, it always has to balance. That's why they call it a balance sheet. So, let's break that down a bit. On one side, you have the assets. That's everything the company owns that has value. Cash, buildings, inventory, you name it. The other side of the equation shows how they paid for all that stuff. It was either with borrowed money, which are the liabilities, or with money from the owners themselves, and that's the equity. Okay, so a company can look great on paper, right? It's got a profitable income statement, a solid-looking balance sheet, but here is the million-dollar question. Does that mean it has actual, physical cash in the bank to pay its bills next week? Well, the answer, and this might surprise you, is not necessarily. Okay, this right here is probably one of the most important ideas for any new financial detective to grasp. See, profit is an accounting concept. It counts a sale when it happens, not when the cash actually hits the bank account. Cash, well, that's the hard reality of what's in your wallet. A company can absolutely be profitable on paper, but totally cash poor in real life. And that brings us to our third, and I gotta say, maybe the most revealing clue of all. This is our secret witness, the one that tells us what really happened with the money. It's time to follow the cash with the cash flow statement. This thing is a detective's secret weapon. You can think of the cash flow statement as the bridge connecting the other two reports. Smart investors always say cash is king, and this is why.
This statement cuts through all the accounting jargon and just shows you the raw truth about whether a business can actually survive and grow.
The cash story is always told in 3 parts. First up, you've got operating activities. This basically tells you if the main business itself is generating cash. Second is investing, which shows if the company is spending money to grow for the future or maybe selling off its assets. And third, there's financing. This reveals how the company is paying for everything. Is it taking on debt, selling stock, or paying dividends to owners? Together, these 3 acts give you a really vivid picture of a company's true cash health.
All right, last piece of the puzzle. For any of these clues to actually be useful, we have to know we can trust them, right? We need to be sure that everyone is playing by the same rules.
And that's exactly why we have these strict accounting standards. They make sure that when you look at a financial statement from Company A, you can compare it fairly to one from Company B. It creates a level playing field for our whole investigation.
Now, the 2 main rule books you're going to run into are GAAP, which is the standard here in the United States, and IFRS, which is used by most of the rest of the world. They're very, very similar, but they're not quite identical.
And you can see a few of the key differences right here. They vary on little things, like how many years of past data a company has to show, and they have slightly different rules for how to classify certain debts or expenses. You don't need to be an expert on all the details, but the big takeaway here is this. Always know which rulebook a company is using, especially if you're comparing 2 of them.
So let's wrap up this investigation. One statement on its own is just a single clue. But when you put them all together, the profit motive from the income statement, the financial crime scene from the balance sheet, and that secret witness testimony from the cash flow statement, that's when the whole compelling story of a company really comes to life.
So there you have it. You now have the fundamental tools of a financial detective. You can look past the headlines and the hype and decode the real story a company is telling about itself. The only question left is, which company's story are you going to decode first?